In this video, we are going to discuss all of the different ways a VA loan can be done, from what you can use it to purchase, what are your options when it comes to refinancing, and also who can even use the VA loan. Before I jump into the video, me and my team get contacted every day by veterans who are trying to navigate the VA loan process. So if you find yourself stuck or you just want to talk to a team of individuals who specialize in helping veterans go through this entire process, give us a call, shoot us a text, and just reach out to us and we'll be happy to help. The first thing we're going to talk about is who can use the VA loan. Obviously, if you are a veteran that has served our country and either retired or just simply got out of the military, maybe you even were med boarded and got out due to a disability. Well, in those cases, you are going to be able to use the VA loan as long as on your D-214 or your separation paperwork, it shows that you got out under honorable conditions or even other than honorable conditions. I've seen those be an option as well. It just really depends on your particular circumstance. So it's not always a guarantee for other than honorable, but it's definitely worth a shot and worth taking a stab at if you want to try that route. When it comes to active duty, you can even use the VA loan in that case as well. So if you're still currently serving our country, you can use your VA loan while you are serving and purchase a house across different duty stations as you PCS or just live out your time in the military. Another form could come from either if you're in the Reserve or National Guard. With this, though, comes with a little bit of a caveat. You see, if you are or were in the Reserve and National Guard, you're going to require at least 6 years of service. If you are trying to use it in less than 6 years, it is going to require that you have done Title 10 or Title 32 for something other than training. Then you can go ahead and use your VA loan in that situation or that case. When it comes to surviving spouses, if you are a surviving spouse of a veteran who has passed away due to a service-connected disability, then you could even inherit the benefits of that veteran and be able to use a VA home loan in that fashion. This is actually probably one of the biggest myths or one of the most underserved cases that I have seen across VA loans. There are so many veteran spouses that unfortunately have had their spouse pass away due to a service-connected disability, and they thought the benefits when it came to the VA loan died with the veteran. So it's definitely worth a shot. If you know a spouse of a veteran and that veteran is unfortunately no longer with us, let them know. Spread the word, share that with them, because that is something that I've seen change lives for a lot of spouses. So how can you use your VA loan? Well, the most common way is going to be purchasing a property. And that could be either purchasing a single family home, a condo, or a townhouse. But the condo and townhouse is oftentimes confused. You see, a condo, you're typically going to be purchasing a unit within either a building or a subdivision, but you're not going to be responsible for anything on the exterior. You're only going to be responsible for what's known as walls in. So when it comes to your homeowner's insurance, it's typically going to be a lot cheaper than a townhouse or single family home because you don't have to worry about anything on the outside. Like, for example, even the roof is typically going to be covered by the HOA. Now, when it comes to HOAs, though, the condo route is more than likely going to have the most expensive HOA because they are basically inheriting the responsibility of everything on the outside for the entire property and all the other units as well. But when it comes to a townhome is, I would say, kind of more of a betweener in terms of like right between a condo and right between a single family home. It's not necessarily going to have its, necessarily be detached, but it's probably going to be attached next to other units. If it does have a garage, your garage will probably be attached also to your unit. And you'll also probably have a patio or a small yard as well. Your HOA will probably be a little bit cheaper. More than likely, it will be a little cheaper than when it comes to a condo, but your homeowner's insurance will probably be a little bit more as well. And that's because you're now going to have some form of exterior part of your home that you're going to be upkeeping or responsible for yourself. Before I jump into our next point, if you got value from this video, do me a huge favor and hit the like button down below. What this tells YouTube is that this information is valuable and more veterans need to know about it. So if you don't mind hitting that like button and possibly even subscribing and joining the community, I would greatly appreciate it. Let's talk about some of the other ways that you can use your VA loan. Another form that many veterans don't even know is possible is purchasing multifamily property. And this could be a duplex, a triplex, or a quadplex, pretty much anything between 2 to 4 units. So when doing this, you are only obligated to live in one of those units and you can rent out the other units. So if you buy a fourplex, for example, you can live in one, rent out the other 3. I've helped several active duty veterans purchase multifamily property and allow them to be able to rent out the other units, offsetting their mortgage payment and allowing them to earn some passive income. Another thing you can do with your VA loan, or another way you can use your VA loan to purchase property, is going to be for either manufactured homes or modular homes. These are very similar, but there are some very big differences too. You see, modular homes, the majority of what is being built is actually being built indoors, but then it is put together on the property itself. Think of it more kind of like, I would say, like Legos in a weird way. A lot of the pieces to the home are manufactured indoors, but then when it comes to putting everything together, it's done at the property. Whereas a manufactured home is going to be more similar to like a mobile home, except even though it was built and put together, it's now going to be basically placed on a permanent foundation at a specific property. And then it's going to also have the HUD label to make sure that it's shown that it's also been inspected and it meets the requirements for it to become a manufactured home. So very similar between the two, but a little bit different in terms of the way they are built. Another route you can use your VA loan is going to be buying new construction or custom construction. These are 2 different routes. You see, when you go the new construction route, this is where you're going to be going to a builder and they have already purchased the big plot of land and they're already building and subdividing that community to build individual homes within it. So you're essentially not going to be closing on that loan until after your home has been built, it's been inspected and everything. But when it comes to custom construction, this is a little bit different because now you are basically going to be finding the land. You are going to be choosing your builder. You are going to be going through like a design phase where you're picking really everything out, versus when in the new construction phase, there may be a few things that they let you pick in their design center, but pretty much 99% of the home they picked for you, and they allow you to make very small choices. And it's typically choosing between 1 of 2 or 3 options within those choices. Back to on the custom construction route though, you are picking literally everything. And on the custom construction route, your loan does fund in an earlier state, but that's solely for the construction team to be able to have the funds available that they're going to need for them to be able to start, 1, purchasing the land, and 2, starting purchasing either the equipment, the materials, paying for labor and things of that nature. So I do have a whole video on the custom construction route. I'll even link that above for you guys to check it out, and down in the description if you want to go and check that one out. And custom construction is the route that you want to go. The other route you can do with your VA loan is going to be using it to refinance. This is going to be in a few different ways. The first one is going to be the streamlined refinance. This is also known as the IRRRL, and not Earl like your friend Earl or your uncle Earl. IRRRL as an interest rate reduction refinance loan. An IRRRL is what's going to be available to veterans when the interest rate market actually trends downwards from what their current interest rate is. So for example, let's say your current interest rate is 7.5%. And about 6 to 8 months down the road, interest rates have gone down to now, let's say 6.5%. So 1% difference. The streamlined refinance allows you to basically refinance your loan into the new lower rate without having to do any income verification, asset verification. You don't even have to do an appraisal. You actually don't even have to pay your closing costs on the new refinance. Those are actually rolled into the loan, and then you basically inherit that new lower payment. The biggest thing that the VA looks for when going this route though is, 1, is the new rate at least a 0.5% lower than the veteran's current rate. And as I mentioned, 7.5 to 6.5, that checks out. The next one, the VA wants to also make sure that you have made at least 6 on-time payments from the last loan that you did. So again, if you purchased the house only 6 months ago, they want to make sure you have at least 6 months of on-time payments. Now, if you purchased it 2-3 years ago, then you don't have to worry about that. But they do also want to make sure that you have made at least all of your mortgage payments on time within the last 12 months, if that is the case. The next thing that they're going to look for is they want to make sure that any costs associated with doing this refinance are recuperated back to you through your new monthly savings within 36 months. That's a lot. It's a tongue twister. But for example, let's just say that your closing costs on the home that you're refinancing is going to be $5,000. and your monthly savings is going to be, let's say $500. What they're going to look at is how long is it going to take, how many months in mortgage payments are you going to have to make where you're saving $500 a month from your old mortgage payment to your new one, to where you are basically recuperating that $5,000 that got rolled into your loan. So that's one of the biggest things that's in place to protect you, to make sure that you're not just being forced into a bad loan or a bad refinance. Because some streamlined refinances don't make sense to be done, even if the rate is lower. So it's important to consult with somebody who knows what they're doing and is looking out for your best interests. Another route that you can go on the refinance side of using your VA loan is going to be for a cash out refinance. Now, the cash out refinance has a few different avenues that you can go down. One of the most common ways that veterans do a cash out refinance is going to be for debt consolidation. Let's just say that you have your mortgage payment at $2,000. And after all of your other bills, like your auto loans, credit cards, maybe you even have student loans, those equate to another $1,500, making your total monthly debt at about $3,500. In a debt consolidation situation, what you are now doing is essentially using the equity that you have in your home to pay off the balances of your debts for all of your other monthly liabilities, and thus combining all of them into one loan with the hopes of that the new payment equates to a lesser amount than that total of $3,500. So some cases, this really does make sense for veterans because it allows them to now have a lesser monthly total liability, even though their mortgage payment is higher, thus allowing them to save some money every month than maybe they would have in the situation where they were paying each thing out separately. This sometimes makes sense for veterans where the interest rate that they had on their mortgage was actually lower than where their new rate would be, but because their total payment went down across all of their liabilities, it made sense for them. Not always going to make sense for everybody, and it's not something I'm advising everyone to do. But if you are trying to do a debt consolidation, it's something worth considering. Another thing you can do within the cash out refinance is going to be using your equity to invest in something, or to maybe purchase another home. For example, when it comes to the cash out refinance, if your home is worth $500,000, but you only owe $300,000, you have about $200,000 worth of equity in there. So if you're trying to tap into that equity to purchase another house, whether that's in cash or use that equity as a down payment on another home, you can do that. That's another really cool option that the VA loan allows you to do when it comes to using your equity through the cash out refinance route. Now, when it comes to the investment route, it could be for something else. It could be because you want to purchase, something, or invest in something in the stock market. And, there's so many different routes you can go with it. If you're trying to invest into a business, even, that's another thing that you can do. It's really up to you which regards to what you want to do with your equity, but it's important to also make sure that you're considering that your mortgage payment is going to go up, and you want to find out, is whatever that equity that you're pulling out and that payment difference, is it going to be worth it when it comes to what you're using that money for? So there you have it, all of the different ways you can use the VA home loan. If you want to learn how to have multiple VA loans at the same time, click this video right here.